it was 7,086. And I kind of did a little profile. Let me see if I can get that. Well, there it goes. Just from the area that broke out. And when on April 17th, when prices did break out, we've got this big, huge migration. This is not a distribution. This is a migration from the lows March 31st until today. And you could just tell by the way the profile stands is it's very choppy. You know, normally you see the, even though you do have a couple high volume areas in here, they don't really constitute distributions, or, you know, the rules don't really apply. You've got an area in here of high volume and probably one in here. Oops, excuse me. And it just illustrates the prices that were in here. We've gone higher than that, and I believe the last 9, so this is the first day and the last 10 that the market has been down. Just looking at daily chart, excuse me. And you can just see this is how prices have been going pretty much straight up. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. First down day, it really hasn't changed much structurally in the market. As I had mentioned earlier, we've got a little bit of a pullback, definitely needed. You've got, as you can see, the value area today, it's not that big of a deal. Pullback, and relatively speaking,
Iran's Tasnim sites Revolutionary Guards are saying that
distribution just from the lows from May 19th. And once again, you've got this little area in here, but nothing's really saying a high volume area will be willing to test. Watch the value areas. If we've got a distribution, if we start pushing higher, may change a little bit of the distribution, but we've got this level here, and I kind of continue to talk about really high volume areas within a profile from May 28th. You put it on that point of control, and 2 days later, this was holding the market. And even though it's kind of went down, it's kind of watching this area here. So the market's saying this 75.82 is going to be somewhat relevant in the market. So watch how this price is reacting. If we break to the lows, break below the lows, we're going to have a little bit of support in this area. And I'll give you the levels here in a second. That would be the 75.41 to 75.22 area. Watch to see how this high volume or these overlapping value areas, these will act as support and resistance, as I had mentioned. So watch this area. If prices do get in here, how prices react. Do we get support? But if it breaks below, I'll obviously inform you what's going on. But watch how prices react in here if they get down here. The other area that I wanted to show you is this little area yesterday. It comes to this high volume area from Monday. Kind of held in here yesterday. So again, watch that area also. But as you can see, we're kind of just drifting back and forth for the structural today. We sold off initially, tried to rally, had an issue, really couldn't get much momentum. Markets pulled back. We're trying to rally now. Let's see how high this gets. If it can't, You know, what's the intention of the market? As I constantly say, what's the market trying to accomplish? Right now, over the last few bars, it's trying to rally. How successful is going to tell the remainder of the day. If we do start, we may start rotating back and just maintaining the value area of today. But if we can, and we start pulling back and taking out the 75.67 area, these lower candles, we may start having a little bit more supply hitting the market. So that's my 2 cents on the E-minis. The NASDAQ, there's not that much of a change from the E-minis. This is a 30-minute chart. And again, we've got that huge migration higher. I did illustrate this area. It's a little bit more prominent here in the NASDAQ than it was in the E-minis. So this is an area, even though this is not considered, you know, just let's get this out so it's a little cleaner.
Angry PM
You
Magyar says his
got
government
this
does not
balance
support
area
accelerated
in here.
EU accession talks
And
for Ukraine.
watch this. You've got this very high, the point of control. Watch how this works. If prices do get back down, this will act as a magnet. So again, you know, the markets today, the E-minis are actually, excuse me, the NASDAQ is showing more strength than the E-minis have. You could just tell by the relative performance of the value area versus yesterday. They're somewhat overlapping. So there is more strength, surprising, in the tech sector. So with that in mind, you know, we're not doing much, probably more overlapping today. So, you know, let's see how this reacts. Will probably have an impact on the E-minis. The Russell 2000 is a little bit more choppy than the E-minis and obviously the NASDAQ. So we're not getting that big push. I've talked about it. It was kind of lagging between the other out of the three indexes. That one was lagging the most, and it's kind of showing it. Our value area is kind of testing the lows from Monday. A break of here, we'll start pulling that back and start possibly testing the 27.45 area. I don't know how many people are trading the Russell, but watch that because you've got, if you put a profile on, I should have had this. You've got this high volume area here that will, as I mentioned, if we start breaking down, act as a magnet. 28.14, 27.90. That's kind of logic I'm looking at right now, is if we do get this break, we may start testing this area. And once again, as I mentioned in the E-minis, watch how this key area, how prices react. Do they jump out of there? That meaning, you know, this area becomes a strong area of demand, or if kind of lingers and starts pulling back, we may start testing at 27.45, which would be the area of breaking out of that distribution. This is a 30-minute chart. This higher distribution and rotating back down into here, which would put a whole different structure into this market and probably have an impact on both the E-mini and the NASDAQ. Gold. Gold's really not, it's, as I mentioned a few weeks ago, it's drifting. It's really not doing a lot. We've got, let me switch this to a day, get a little bit better idea. We're really not doing a whole lot, just kind of stuck in here. I could probably take this out just to give you, but we've got this high volume area that I think may act as support. I called this out a few weeks ago. I think back in end of April or beginning of May. And it looks like, and again, my big question is, what's the market trying to accomplish? It ran up to this distribution and is quietly pulling back. This would be the support or the demand area in the distribution. If this area holds, and again, I think it's going to test this. And again, we're looking at the 43.62, 43.04 area. I've mentioned time and time again, these are not precise numbers. These are areas that supply and demand are put in. It's not a trend line. So give it a little leeway, but I do think that there is some more downside on the gold prices. And again, watch the action is how does it react when it gets there. I mentioned this a few weeks ago, copper. Copper's really doing okay. I mean, we've had this area of, I guess, somewhat distribution, imbalanced distribution. Most of the volume has happened above this area. So watch how prices react. We're above the 62.27, which is a slow volume area, and had been acting as a separation of distributions. Prices pull back, somewhat held, and they're trying to rally again. If you get a break below the 6.15, we're probably going to start rotating down to the 58.20. But if we get a new high, we may have another leg higher. So also watch that. Keep in mind of how this is working. This is, and the reason this is important, this is an industrial, has more an impact on, or a reflection of what is going on in the economy. And crude, obviously, a big force. We've got this high volume area in here from this distribution. This bell curve is very mature. We've tested basically the 80-40 level and the 105 level, and prices tested at 1, 2, 3, 4, and 5 times. So this is a well-established range by the market. It's tough trading in here, revert to the mean type of trades. If there is a break one way or another, obviously play it. If you're going to play it, be really careful. Make sure that there's a lot of energy in it. When you get mature levels like this, mature bell curves like this, it usually takes a lot to get out of. That's what experience has shown me. It just takes a lot of energy to get out of there. You kind of look at this area in here. It kind of went and pulled back and ran up and pulled back. And the same thing here, kind of here, and then immediately jumped out. You don't want to see a move like that to break a mature bell curve. You want to see pretty much an excess day, defining of a lot of single prints, something like this, where it really sustains a break above. And the last one I want to talk about in the futures market are the yields. We've got the 10-year Treasury. This is the price of the 10-year Treasury. We've got this low volume area that I highlighted that we've been kind of playing around with. Let's see how this works out. We kind of went below this area, immediately shot off and put us back into this distribution. We're probably talking the bulk of it, 102.20 and a half to 110.08. Watch these levels. If it gets above here, we're probably going to rotate higher. But if we start breaking below here, which I hope we don't, these were converted. So if that's breaking, it means yields are going higher, which will have a little bit of pressure onto the market. I do want to talk a couple things about the ETFs. As you know, this is the XLK, which is technology. It's just been, as I said, migrating much higher until we start testing this 174 level. This thing's just going to continue to push higher. Watch that. You've got discretionary continues just to have a hard time. You want to see discretionary. It's a reflection of the economy. You want to see this go higher. If this starts to rotate down, again, this may be a reflection of the economy. If it does break down, that the economy is starting, or the consumer is starting to feel a little bit of a pinch in the pocketbook, which will obviously reflect in the overall market. Financials, it's just stuck. I thought we were going to get a push higher. We got into this high volume area and it just stuck. So we're kind of rotating in here. There's really no trade or no signal economically what's going on. And again, this is the financial stocks. The X1 XLE is the energy, and very much like the energy stocks, or the crude prices, really not doing much. You're kind of got a bell curve trying to build in here. So there's really not a lot of trade. You're kind of balance bound. Industrials, even though they've kind of tried to go higher, we've got this area of here that ended up being an area of supply, push prices down. We're kind of trying to get in here. And again, what are the markets trying to do? We're trying to get into this area here. If I could extend that out. When prices are trying to get up, if they're unsuccessful here, and they start getting a break of the 168 level, we're going to rotate down to 158. So again, this is another reflection of industrials are not doing well. It's a reflection of the economy. Healthcare, it's pretty much range bound. They may rotate back up, but we've got this distribution that we've been stuck in. In here, rough guess is, it's just tough. Healthcare goes by its own drum. Also here, we've got the consumer staples. You've got a balance area in here. Prices ran up to this top of this longer term distribution. It worked out perfectly, and pulled back down into here. There's a pretty good chance with the staples. The market, I don't want to say it's a counter move with tech right now, but looks at the staples is we've got this area of demand. If they hold and we start getting a push higher, they also say that money is going from some of the higher beta sectors or high buy and pushing back down into, or pushing to the defensive or the staples, which means this may sometimes be a precursor to a little bit of a swing sell in the market. Materials, same thing, pretty close to the pattern of the industrials. You've got an area of supply there. Prices try to get up and had a hard time. And again, what are they trying to do? They're trying to go higher. If they can't, rotate down. And the last one I want to talk about is going to be communications. And as you can see, this level's, it's just easily identified as a mature bell curve. You've got this distribution, and this prices are going back and forth. It's a pretty mature bell curve, and the same rules go as what I mentioned with earnings, or excuse me, with energy, is that when you get a long-term established bell curve, and this was going from September, so that's 1, 2, 3, 4, 5, 6, 7, 8, 9 months bell curve, it's going to take a lot to get out of here. So take that in mind if you're watching these breaks. I appreciate everybody's time. I hope I brought a little bit of value. Again, I'm Tom Incorvia with Blue Tree Strategies. And have a good day, and I will check in with you tomorrow.